Welcome back. You're watching Trade of the Weekend. Today we bring you a technical analysis on Anglo American, Kumba Iron Ore, and a pair trade of First Rand and Absa. Founder of Herenya Capital, Petri Redelinghuys, joins us now with that analysis. Thank you so much for your time, Petri. Of course, we're focusing mostly on the commodities, the commodity stocks of Kumba Iron Ore and Anglo American, of course, linked because the one is the parent of the other. But just to start off the conversation, because we're dealing with a whole range of commodities here. In terms of where we are in the commodity cycle now, where actually would you say we are?
Okay, so firstly, thank you for having me. And I think it's a tough thing because if you look at one side of the equation, you have this sort of topping out of the interest rate cycle.
Yes.
Which I've mentioned on the show a number of times that I see as a medium to longer term bearish signal, right? As we've seen historically, when the US starts to raise or starts to cut interest rates, generally this is recessionary, right? We've also mentioned a number of times that I think that there's a bit of a divide between East and West where let's call them developed markets or developing markets, sorry,
yes.
or BRICS nations versus the developed or NATO nations,
yes.
right? So I think that shift is starting to take place. Obviously these things move very, very slowly, but that shift where the BRICS nations begin to outperform versus the NATO nations which begin to underperform, right? I think that is still sort of in the making, right? And I think that we see that. I think, with the US elections and changes a few things here and there, but I think what we probably see is a strong push into the election. We most likely see a Donald Trump victory. We see a very strong push after that. And then we start seeing the interest rate cuts coming through, and then we really start to see this divergence. So based on that thesis, I'd say that we probably have a little bit of upside to come in the commodity space, but not in the immediate short term. Ironically, we're buying two commodity stocks today. So in the immediate short term, we're expecting them to go higher. But these are technical trades. From that larger economic cycles perspective, I think that we are, the commodities are in a good space now, and they have been for some time. But I think that if we do continue to see this divergence between China and the US, particularly, is really what the game is about. We think that China is going to continue to grow, for quite some time in the future, where the US might start to struggle over the next 5 years.
Well, talking about China, because that is one of the markets that basically has the iron ore market in a kind of weird space right now. We did have results out of Kumba Iron Ore last week, where we have seen a plummeting in the price there. Of course, there are mismatches when it comes to supply and demand. Just talk to me about what you are seeing there with Kumba Iron Ore.
Well, I think that the way that we're looking at it at the moment is from a very technical perspective, right? The way that it looks at the moment is that it's trading on what we think is a relatively strong or significant support level. And if you have a look at my chart here, so this is a daily chart. I'll just switch this to a weekly chart for ease of reference, and zoom in a little bit to make up for the last time. But if you see, it sort of starts all the way back here, and I'll just put in a little trend line in, or a little ray line in, so that we can indicate how significant this level is that the market is trading on at the moment. So from our perspective, we see that this 400 Rand level essentially on Kumba is quite a key support, and if we can buy it at or around that level, as a potential short-term trade for a bounce, maybe up to 500 or 600 Rand a share, that's something that we think is a high probability trade. And if it breaks below here to say 385 or 370, then we can get out. So we've got a decent risk reward set up here for us, at least from a weekly perspective, or with a support level that stretches back to 2018. We've got 6 years of significance in this trend line, or in this sort of 400 Rand support level, right? And we can see even, most recently over the last little while, late last year, it was below. Since it managed to break above, it's been support ever since, right? And we're now back on the support level here. So we think that it's a very highly likely outcome that we probably bounce to the top of this range. You could probably put a range indicator there, and you can say 550 is sort of a conservative target, maybe 600 with some luck. So from that technical perspective, we very much like this trade. what the entire situation is with China and demand and production.
That's not really what you're factoring in right now.
Not really what we're sort of, not necessarily relevant to what we're doing in the short term.
All right. But in the long term, I mean, what will a proper sustainable bounce depend on there?
I think industrial production needs to obviously grow in the Chinese economy. And the Chinese economy has to get back to that 7% growth rate, right?
Even with the property sector right now being still in the doldrums.
There's been a lot of overinvestment in that sector historically as well. We've seen that some of those constructions or some of those projects had to be sort of destroyed, torn down, because they just essentially built and built and built and built.
Yeah.
Build it, then they'll come, and then it's fine if you build quality, but that is not all of it was built great, right? But I think that what we are seeing is a transformation of their economy. A couple of simultaneous things. I mean, we look at it and we think, oh, it's so very disappointing. That they still build more tarmac, more road than the entire U.S. highway network they build every year. Right.
Yeah.
And this is while it's going poorly for them.
Yeah.
So it's. I think that there's still quite a bit of growth to happen. There's a lot of urbanization that's happening. There's a huge amount of people that are coming out of poverty and moving closer to the cities. And okay, fine, they get a bit ahead of themselves every now and then. But at the end of the day, I think to count them out is a fool's game.
And everything is relative.
Yeah, and I think over the next 10 years, China's going to continue to grow. They've got upward trajectory. They're investing in Africa aggressively, particularly to get hold of commodities for cheaper.
Yes.
And they're not doing that because, they're thinking 50 years in advance. They're thinking, okay, things are tough now, maybe the property sector's too hot or whatever. They're continuing to make investments in Africa to get closer to minerals and resources so that they can continue to build in China.
Yeah.
So we might think it's a bit hot, but they're still running. Their intention is to keep going because they have, millions upon millions upon millions of people that they want to get out of the rural areas into an urban environment. So there's a lot of development still to come from China and India.
Yeah, all right. Well, let's take a look at Anglo American, the parent of Kumba Iron Ore. Of course, we know the kind of streamlining that Anglo is going through right now, where they've said that they are keeping Kumba Iron Ore. They also released results last week, quite a mixed bag on that front. What are you seeing from a technical perspective?
So again, we're going to lean back on a longer-term trend line. I've put it in here in green, and you can see that it's also been part of this chart for some time. We can go back many, many years. However, sort of really starting 2021 is where we see this significance really kind of pick up, if you will. It does connect again to some level much further in the back, but we'll focus on it for now. So we can see that it's been sort of initially resistance, it turns into support. A late part of last year, early part of this year, it spent some time below here, managed to break above, is now bouncing off of this level again. So two things are happening simultaneously here. One, we have, I'll make this chart a bit bigger. We have the 200-day moving average being this blue trend line over here, as well as our sort of, call it 510 Rand support level, right? And we've got, this coincides with the earnings release, which was quite a bit ahead of expectations, and we had this little strong bounce from here, right? So there's a couple of ways to interpret this. One is that we just basically have a bit of a flag situation setting up here.
All right.
So this isn't going to be the sexiest drawing in the world, but it will be functional at least. So we've got potentially this situation taking place.
Okay.
Where we have a bit of a flag formation, and then we can project that out.
Okay.
Sorry. So we've got that sort of potential setup and this bounce off the moving average and the support level, right? On the back of a bit of an earnings beat, if you will. So we've got a bit of a backwind, I think, for a move up to, it's quite a high up target. This is like 700 Rand a share, right? But again, this is just previous highs that we saw earlier this year. This is earlier last year, January 2023 is the last time the stock was up here. So it's not, that far back that we have to look to see these types of highs. So we think that it's likely that it could potentially get there.
Yeah.
Again, more a technical trade than anything else. I'm not going to get too much into momentum. However, you know, it's essentially a decent setup for us that we can see here as a nice little bullish flag formation.
On a longer term, though, does everything depend on how well they are able to execute their kind of transformation?
Yeah, look, I mean, I think that Anglo's is kind of also potentially a target, right?
Yes.
So
maybe even from BHP again.
There's been a lot of, we've seen them have a go already, right? I think this is something we spoke about some time ago, and we've seen them have a go already. And, you know, maybe BHP couldn't, a deal couldn't be made, but there are other companies out there also, like we forget about Vale, for example.
Yeah.
So who knows exactly what's going to happen. For now, we know Anglo wants to restructure and become a leaner, meaner, badder machine. We'll see essentially, you know, what the outcome is, unlocking value, so to speak. But I think that if you have been approached and someone's tried to buy you once already, I don't think that's the end of the story.
Yeah.
Generally, we know, you know, these things. Look at how long it took SAB, for example.
Yeah.
It took SAB. I started trading, and 15 years later, a deal happened.
Wow.
And they were talking about it the whole time, right? So, so I think that this type of rhetoric might still be in the works for some time. You know, the high probability of it happening, of a new bid coming in the next couple of months, is pretty low.
Yeah.
So I wouldn't say that's a very high probability outcome.
So maybe next year, I mean, considering the fact that they're saying that they will be finishing the implementation of this transformation.
They're going to transform, they're going to become a bit more profitable, they're going to become a bit more leaner, and then when they look a bit better, someone else is going to come with a price that they find a bit more appealing, and we'll probably try again. So give it a year or two. And we might have a situation again. So that's kind of the long-term outlook that I see there.
And they actually definitely do seem leaner. I mean, just from even the cost savings that we saw in the margins that we saw in copper and in iron ore. So it looks encouraging. Yeah,
well, let's see how it goes. I think that there's that call option is still available on Anglos, if you will. And in the meantime, the chart looks really good too.
All right. Well, let's talk about the pair trade between Absa and First Rand. So you are going long on Absa and short on First Rand. Why does this not surprise me? Because a lot of people have been talking about Absa that is undervalued, even though it has, you know, underperformed its peers, that a lot of people do still see value and some upside on Absa.
Yeah, so I think, you know, there's a few sayings that are true. A rising tide lifts all ships.
Yes.
And Absa's been a bit of a laggard, if you will. Compared to the likes of First Rand. So I'm going to do two things. Firstly, I don't know. There's a lot of theory around how you know, pair trades work.
Yes.
And there's two different ways of looking at it. So I'm not really too sure where to start with that. So I think what I'm going to do is I'm just going to draw up a chart. I'm going to add First Rand and Absa on the same chart.
Okay.
Right. So for the sake of uniformity, what we can see here now, I'm going to simplify this chart a little bit, forgive me, just to take away, there's too many lines. All right, so essentially what we have here is two securities on the same axis, and what we're comparing them now, as you see, we've changed the axis to percentages. So this one is, Absa is minus 15.5%, while First Rand is plus 9.5%. So there's a nice little you know, 24% gap between these two. And we can see if we rebase these things over time. So we say over the last 12 months, if they both start at the same point, they're both equal in our first period, on our first day. And then as time goes by, you can see how close their relationship is with one another. And from time to time, they separate. Absa at the bottom, First Rand at the top, and then they come back, right? So now what's happened here, well, they separated a bit. They sort of mostly came back, and they've separated again quite massively. So this creates the opportunity to essentially be short the security that's outperformed and long the security that's underperformed, banking on the fact that this historic relationship, that not the share prices, but the ratio between the share prices will return to what they once were. This is called correlation coefficient. So you can essentially take one divided by the other, or relative strength comparative is another, one divided by the other, and you do that calculation every day over a period of time, and it begins to plot a chart, right?
Yeah.
And that gives you, you can also do a statistical correlation coefficient calculation on them as well, if you want, but essentially the easiest way to do it is just to plot one over the other, put them, rebase them both to 0, put them both on the same percentage axis, and then have a look and see if you can spot any kind of pattern. So this is over the last 1 year. Over different time frames, different things will happen. But if you look at the last 5 years, for example, again, we start at the same price because we rebase them to the thing. From time to time, Absa underperforms first rand, but something happens, and at some point, these guys do sort of meet up again, right? So in this situation, like for example, here they're the same, they separate again, there they're the same. Here they're the same, they separate again, there they're the same. So at some point, these two are going to come back, at least from a historical perspective, are going to come back and meet one another where they're relatively equal to each other, right? So what happens is, let's say, for example, the market falls from here, you are long Absa, and Absa falls 10%, but First Rand falls even harder.
To meet Absa where,
you're going to lose on one side of the trade and profit on the other side of the trade. But the net position is that you will have a profit when these two meet with each other. So you will make more on the one that you make on than you'll lose on the one that you lose on. But one will be a loser and one will be a winner. That's generally how this works. And we're agnostic as to which one it is. Does Absa run up? Does First Rand go another 10% and Absa from here goes 30, 40% to catch up? That's fine if that happens. If Absa falls 10% but First Rand falls 50%, that's fine if that happens. But this ratio between the two will eventually at some point close, and that creates a very, call it lower risk opportunity for us to take a position here. So this is like a market neutral position, some people might call it that. It's also considered a sort of lower volatility, lower risk trading strategy where you're essentially trading the correlation between things or the relationship between two things, and you're being in a position where if the market goes up or down, you're agnostic about it. You're just essentially looking for relationships to return to what they once were.
All right. Well, thank you so much for enlightening us on that and really just your insights on all the other stocks as well. Thank you so much for your time, Petri. That was Petri Redelinghuys, founder of Herenya Capital.